Hello and welcome, traders. I want to take some time today to cover what I consider the 10 commandments of trading. And while there's a lot of stuff out there, and some of these you probably heard before, I think they bear repeating and things for you to remember in order to, A, build consistency and become a better trader. Okay. Frankly, I think we forget a lot of these in the heat of the battle, and we always kind of sink back to the lowest common denominator when there's a lot of really great opportunities for you to be successful. So again, some of these may surprise you, some may not, but I think overall, if you take these down, put these up on the wall, and make sure that you adhere to these, I think you're going to find yourself being a much more successful and consistent trader. And really, it's consistency in trading that makes us wealthy. It's that power of compounding. And compounding can't happen when I'm up 10%, down 10%, up 2%, down 5%, up 20%, down 10%. Okay, that you can't compound those types of things. What you want to do is you want to flatten your trading so that you're as consistent as possible, generating cash flow in your trading account on a pretty consistent and repeatable basis. You really don't want to have those hills and valleys that, oh, I had a great month, I was up 20% this month, and then the next month we don't hear from you because you were down 10%, because you got too cocky and you violated one of these rules. So I'm going to share my screen, and we're going to jump into it with you today. And again, I want to go through what I consider the 10 commandments of trading. So let's jump into it. All right. First commandment, plan your trade and trade your plan. Should be nothing new for you coming from me. You know that I love having a plan. Okay. So trade your plan. Trading without a game plan is like playing chicken with a truck. You may get lucky a few times, but eventually you're going to get killed. Okay. And develop your trading plan, write it down, determine what strategies fit your style, what types of stocks fit your strategy, or options or futures, what tools you'll utilize, what your entry point is and why, what your exits are. Also, plan your counter moves, what happens if the trade goes against you. The best traders try to keep it simple and focus on mastering just one or two strategies, okay, and learn all they can about them. Number two, remove emotion from your trades. Letting emotions get the best of you will result in impulsive trades and irrational decisions. The masses trade emotionally, and usually sheep get slaughtered. A rational individual trades with their intellect. An emotional trader trades impulsively. So if you stick to your game plan, you're going to keep these emotions in check. Discipline and objectivity is the key to trading success. Just admit when you're wrong. Don't blame external forces. No victim statements. Okay. Don't blame other things for your losses. Okay. It's only one trade out of hundreds that you make. So remove emotions. It's okay that we lose. Next, number three, trade according to your personality. Effective traders will find the strategy that best fits their personality. If you're an active person, with time to watch the market and you have a high degree of risk, then consider some very short-term trading strategies, stuff that happens, within a week or 2 weeks or something like that. If you're more conservative, okay, with a little bit of time to watch the market, with just a little bit of time during the day, maybe, then consider safer intermediate term strategies. That's how we typically are trading at Income Navigator. Is we're trading strategies that really don't require more than 15, 20, 30 minutes a day, okay, so that you can continue to enjoy your life and work. If you can't sleep at night because of your investments, you need to reevaluate your strategies. So trade according to your personality. Number four here, make the trend your friend. Always trade with the trend, never against it. If the stock's in an uptrend, don't employ bearish strategies. If it's in a downtrend, don't employ bullish strategies. Okay. If it's neutral, don't try to turn it into something it's not. Okay. Don't try to catch a falling piano. I know people say a falling knife, but don't try to catch a falling piano. If it's falling, get out of the way. Okay. Trying to pick the market top or the market bottom is virtually impossible. It's a fool's errand. You're going to get burned 90% of the time. Use moving averages, use the RSI, MACD, trend lines, just simple things. That's only 4 things: moving averages, RSI, MACD, trend lines, in order to figure out what is the trend, what's the momentum, and am I putting the odds in my favor to be successful. Number 5, employ good money management techniques. Don't trade with money that you can't afford to lose. Make sure that you're allocating a specific percentage of your trading capital to option trading or futures trading. Okay? Don't go all in 100%. Okay? Also, don't go in with 2%. Okay? Make sure you've got the money there to be successful without putting yourself in jeopardy. Maybe make sure that no more than 2% or maybe up to 5% of your capital is in any single trade, okay? Or at least your stop loss. Okay? We don't want to lose more than 2 to 5% of our account on any one trade. Don't put all your eggs in one basket either. You don't have to find 90 different assets, okay? So we don't have to get ridiculous about it, okay? But don't just do one thing all of the time. Diversify. And you can diversify by time, strategy, and assets. You don't have to own 10, 20, 40, 100 different stocks. You can trade just the S&P. You can trade the S&P with gold and oil or a few of those, but just pick 2 or 3 things that you can master. You can use multiple strategies, 1-1-2s, naked puts, credit spreads, ratio spreads, strangles, whatever you want to do. You can do all of those different strategies in different time frames on the same asset. So you don't have to get carried away, but make sure you're sizing properly. Okay, you don't have to trade small, okay, but you shouldn't trade large either. All right, track every trade. Number 6, good traders track their trades. They evaluate their wins and their losses weekly, monthly, annually. They adjust their plans periodically to meet the changing landscape. Not every trade works forever. Know what's winning and why, and what's losing and why, so you can evaluate and improve your trading. Self-evaluation is the key to becoming successful in the markets. Okay. Number 7, let the probabilities work. Let the probabilities work out over time is a key to consistency. Don't change your strategy constantly. Okay. If you have a positive expectancy, then let it play out. If you have a 90% expectancy and you lose 3 trades in a row, you got to keep putting new trades on, okay, so that you can get back to that 90%. What I see is that people either A, get out of their trade early, so they didn't let the probabilities work, either a win or a loss, doesn't matter. Maybe it would have turned around, okay? Maybe it would have continued to make more money, but if you keep shortcutting your wins, you're not going to make enough money to meet your goals, right? So consistently place new trades and allow the probabilities to play out. Number 8, never revenge trade. A loss is a loss. They're expected. Just move on. Don't force a trade in order to try to make back a loss. It's going to involve emotional trading, which is going to result in a poor outcome for you. Understand that losses happen. Just deal with it. You're going to lose trades. What you don't want to do is start to let your emotions get the best of you and try to get that money back. You know, I know I'm right. Don't try to prove the market right. It will always prove you wrong. Stay disciplined and enter according only to your plan. Number 9 here, don't chase the holy grail. With the internet and all these different furus out there and all kinds of traders posting on Facebook and Twitter and all in YouTube, and there's so much noise, it's hard to block it all out. Okay? But what you want to do is find trades that fit your plan and your style, not trying to trade someone else's plan or their account size. You have no idea how much they're risking or not risking. What if somebody's trading $1 million account and they're showing great wins and they're making $5,000, $10,000 every week or something like that? Okay? And you think, well, that's great. I can do that. I've got a $500 account. I think I'll try that. Or I've got a $5,000 or a $10,000 or $20,000 account. They're risking nothing. You're going to be risking giant chunks of money to try to make their same money. It's not going to work. Consistency in trading is key. You can't build consistency if you're moving from one strategy to another. Settle on something that looks like it's going to fit your plan, that you've back tested, you've tested it out, okay, and give it a go and stick with it for an ample amount of time. There is no holy grail of trading. Okay? If there was, eventually word would get out and everyone would be doing it. Okay? There's no shortcut to educating yourself. The holy grail of trading is finding the trade that works for you. I'm going to pause there on that. The holy grail of trading is finding the trade strategy that works for you. Okay? For me, it was finding the 112, okay, and the strangle trade. For others, it might be ratio spreads or long calls or short puts or credit spreads or who knows what, butterfly trades. The holy grail is what's working for you and making you successful. You don't need 90 trades. You just need to find one or maybe two that work for you. Surround yourself with great people and mentors who are also going to help keep you centered and consistent. Okay? They'll keep you from trying to chase the holy grail and joining 16 different services constantly. And you go in and you learn something for a month and then you quit because you're going to try it or it didn't work. Nothing you do is going to work within 30 days and be a lockdown success. You need to trade something for quite a while. And the way to do that is if you're going to join a service, whether it's our service, an Income Navigator, or someone else's service, joining for a month or two isn't going to do you any good. Okay? If you don't figure out what the trade is and educate yourself and find people who can help you place that trade, you're going to keep just bouncing from one to another. The goal is find a home, stick to it, and find one that has great people that you really get along with that share your same style and mindset, right? And then the last one here is sometimes the best trade is the one you don't make. Don't trade just to trade. Don't trade because you're bored. You don't have to be in the markets at all times. Trade your plan, as I've said before. If no stocks currently fit your plan or your strategy, don't force them into your strategy. Let them come to you. Forced or emotional trades will usually end badly for you. The stock market is not going away tomorrow. There will be more trades. So when in doubt, stay out. There will always be another horse to ride coming around the bend. Remember that patience is a key to success here. So I want you to really work on becoming patient and letting the trades come to you. Have your plan, have your trade plan. Go through these 10 commandments and make yourself more valuable. Have a great day, and I hope this was helpful to you. If you like this video, click the like button down below, subscribe to our channel, and we'll see you in trading tomorrow. Bye-bye.